Hey everyone, it's Zach with Palantir Research. Our crowd favorite Palantir bull, Mariana from Bank of America, raised her price target to $21 from $18, and here's why. And also, big shout out to Amit for always sharing this per usual. Now, Bank of America gets right to the point. AI is not a fad, and it's leading to real profitable growth for Palantir, which we saw in the earnings release from them. Palantir's differentiation in AI services, which I've also been talking about with their mode and ability to expand within and across industries. Bank of America sees the same thing with them having momentum, but still seeing the market in its infancy. And to be honest, I agree. AIP is basically a baby at this point, already contributing meaningfully. And citing customer count, revenue, run rate, all for commercial, this growth engine in Bank of America's opinion is AIP, hence the raise from 18 to 21. Now, for 2024 and beyond, Bank of America sees many catalysts that Palantir is well positioned for, even if there is a challenging macro perspective. With Palantir being a company for bad times, as Karp has said numerous times before, companies like to cut costs, but also reduce costs, which means they can still invest in products like Palantir during these tough times. And with the US government being a major customer too, there's a level of balance and stability that they provide. And as we've also seen with their adjusted operating margin for the last earnings, Bank of America expects them to slightly improve this metric next quarter because research and development spending is healthy, 18 to 20% of sales, as they've continued to expand pretty much everything here. So Palantir seems to be doing more with the same amount of spend, at least proportionally. And Bank of America shows the consensus here with their expectation for estimates. Pay close attention to the GAAP EPS. They're going to start accelerating after 2024. Now, it's not a priority to me, but this is how EPS works with scalable growth companies. Once you turn the lever to be profitable, it kind of just explodes there. So over time, PE ratios can become relevant to more traditional investors. Well, probably not by 2025, as you can see with the 50x ratio, but well into the 2030s, if you look that far ahead, we may start seeing traditional value from Palantir's PE-wise, unless growth expectations remain strong ahead due to their amazing performance. Now, Bank of America goes into a little more detail with AI being more than a fad. They focus on EPS from the chart, but customer count growing and forecasts are strong too. And kind of repeating the first paragraph to just wanting to make sure these signs point to a real foundation of the company. Now, beyond 2023, the constraints of the macro are the focus beyond 2023, but they say AIP offsets this because they've reduced their use of forward deployed engineers, and actually with AIP bootcamps having leveraged them to essentially onboard or trial multiple customers at once, where maybe an FDE only worked with one. And then we can expect Palantir to get better and more efficient at this over time since this is their focus. But the macro charts say they provide why they think the challenge is still there, though, for 2023. It won't necessarily be the level of 2022, but as you can see for 2021 levels, we may end up being the same in 2023. And they also point out productivity drops. This actually is a tailwind for Palantir because AI should increase productivity theoretically because it removes the mundane and allows workers to unlock actual value without doing much as setup. And then Ontology honestly is a good example here. Companies and an employer who invested in Palantir basically has data ready for analysts and AI usage, while another one trying to build out their data infrastructure without an Ontology or that kind of planning with guardrails and regulation. They need to invest much more into maintaining that relationship themselves between databases and the relationships between them and the analysts that need to further work on ensuring their data is speaking correctly to each other. It adds up, and that gap would widen between investors. Then defense and government too. They're the surprise I always look out for when it comes to contracts. They acknowledge low growth here, but this has always happened in recent times as commercials taking over. Karp has been famous to say that government revenue is lumpy, but Bank of America still expects at least U.S. government growth to accelerate across defense because of the partnership with Prime, as well as microservices to smaller industry tech companies, aka FedStart, and then opening existing contracts to other agencies, meaning Palantir can do more of the same thing, but with different agencies across the government since they've proven themselves before. And this is all with geopoliticals rising throughout the world. Now, policy-wise, they focus on Biden's executive order, and this happened only a few days ago. Basically, the U.S. is setting up guardrails or a framework around how AI can be utilized and developed in their minds responsibly. Palantir is perfect for this environment considering their strong tie to the U.S. government first, the 20 years of work they put into a product to be secure, but also the foundation of their products being built around the auditability and testing of processes and results. And they cite FedStart, which I love too for their business. They will be the highway to get new tech startups that will disrupt the government in a good way. So they're getting in on the ground floor on these, especially for the ones that turn out to be great and expand even more. And in regards to expanding defense prime partnerships, there are many major programs, and these are worth hundreds of millions, if not billions, over time. So just waiting for these to play out and for an announcement with Palantir winning. Now, S&P inclusion. This was a major story. Now, in my opinion, this is aligned with BOA. It's not going to necessarily rocket the stock, but will give them stability. So volatility becomes less of an issue for a company like this when they're in the S&P, because institutions will have to maintain some level of Palantir to ensure their index funds are weighted correctly, which also means it's another force to not sell a stock as much in comparison to when you're heavily retail owned. Now, this is the next section I think was actually a very underestimated point about Palantir, and I didn't even cover it myself too in detail. Palantir continues to expand their margins without sacrificing investment. R&D being able to increase at least sequentially while maintaining their ratios to sales. I know on a quarter-over-quarter basis it fell, but either way, their revenue per employee has been growing nicely too because of their movement away from FDEs and now going to boot camps where they can handle multiple organizations. Now, over time, I expect this to maintain and improve as sales grow. Palantir is a scalable business, aka higher costs aren't fully tied to growing the business, meaning that they can get as much business as possible without spending as much. Now, Palantir has reached it to the big boys club of real profitability for a full 4 quarters in a row, and for 2023, it's going to be a full year of GAAP net income, and that's going to happen. Bank of America sees this momentum continuing well into the future years. This is not a fluke, and they expect margins to actually go up, making this even crazier. So who would have thought buying Palantir in 2020, 2021, and even 2022, with CARP saying we won't be profitable for 7 years, like 2025, and that's pretty far away from that point in time. Now, we're at 2023, and we had our first taste of GAAP profitability at the end of 2022. That was already a surprise. But now we're already here for the full year. So it's not just a one-off quarter fluke that we've seen in the past with other companies. So after all of this, Bank of America raises their price target from $18 to $21. They remain a strong bull, which is always nice to have, at least a couple friendly Wall Street analyst faces to have our back.